Hi, folks. This is Gettess with the Market Sense for the week of April 26th, 2011. The charts I use are from the Trade Navigator software by Gettess Financial Technologies. The first chart we're looking at is the weekly bond market, and bonds have kind of broken out to the upside here. They've held right around this, what could have been resistance level, broke through another one, and are heading up nicely. Doesn't mean they have to continue up, but they've got the previous swing high here around 123.20, and they actually could go as high as 125.28. And the reason I'm looking at such big moves is because of the FOMC meeting we have this week, followed by a press conference from Ben Bernanke with the debt buyback plan that they've had going, supposedly expiring in June. What they have to say about that, whether they'll continue it or not, is probably a primary focus of all the debt markets. So it's possible we could see a substantial move here, which doesn't mean it has to be up, too. Even though they've broken out here, they could now turn and fail. We've got support down under the market in the 119.28 area and more down at 118.16. It looks like they want to go higher to me, but anything's possible. The Fed stuff is just a complete wild card as far as I'm concerned. Now on to stocks. We've been saying for quite some time here that coming all the way back up and not going to new highs would be unusual. Well, they did go to new highs today. Now, it wasn't just a marginal new high, and it wasn't just an explosion, but they are up at new highs, which is all they really needed to do to fulfill their probabilities. Now, that doesn't mean I'm predicting they will turn lower from here, but I am saying they could. Like the commercial, I am saying there's a chance. I think it's wise to start looking for reasons for them to turn down now, and the first reason I can come up with is that resistance just above the market here, which is roughly 1346 to 1350. That's the first area we have to look at as potentially turning them back down. If they do get turned down from there, whether that's because of any FOMC news or not, the first support under the market at the green line there is around 113.20 and more down here in the 113 area. Again, they have fulfilled what I think was the highest probability, which was that were going to new highs. And it doesn't mean they can't go higher. But I do think there's a risk now that they could turn lower from here. You know, the old saying, sell in May and go away. Well, we're getting close, and the price pattern suggests that there's a possibility of topping in here, so I'd certainly be keeping my eye open for it. So that's what we've got for you today. I hope you can find something profitable to get yourself into. Thanks, and good luck with your trading.